From the trading desk of Daily Forex, this is Christopher Lewis looking at the upcoming June 25th session. And this is a little bit more of a longer term type of trade that I think we're going to see. This is the CFD chart. This is basically the cash of WTI light sweet crude oil. And the reason I have this is because, quite frankly, I don't think it's safe to play the futures at the moment because it's just too tight. You're risking way too much money for too small of a reward. However, those of you who have the ability to trade CFDs or even binary options, if you're in the United States, you can use the NADEX, for example. If not, if you're in other parts of the world, of course, there's plenty of binary brokers that allow you to trade the WTI grade US oil. So there's a lot of different ways to play this. But when I look at this, the one thing that I see is we have broken out from previous resistance. Back in May, we kind of broke out and we've gone sideways since then. And that's not really a surprise because, after all, when you break out, a lot of times you have to rest. You have to build up momentum to continue going. I think the trend has changed. I think the trend is to the upside. I think it's going to take a long time to get to where we once were, but I think that's what we're seeing. You can do, a lot of different types of analysis. Maybe you can draw a line here and you can say, okay, well, there was a trend line. We broke out. We kind of walked down it and we've bounced. You could also say, okay, well, there's a trend line there that's broken. So clearly we're now in consolidation. I mean, you could go crazy with lines on this chart. But really, what I'm paying attention to is this box. I think that 57 below is massive support. And I don't know if we're going to break down below because that's basically where we broke out of. But I also see 62 above as resistance. So really the best way to play this contract as far as I can see is to buy it every time it dips. One thing that I would bring to your attention is that we're not dipping as low, and that's normally indicative of more and more buying pressure building up. However, oil markets typically make their move before the summer for the U.S. driving season because there's so much demand, and you can see that happen. That's a seasonal thing. So there is a possibility that we pull back down, but really, I think we've broken out. I think there are a lot of reasons to think oil will go higher. It really comes down to a breakout above 62. A breakout above 62 sends this market much higher. In the meantime, though, I think buying for small gains on dips will be the way to go for, probably several weeks this summer.